Good morning, says Mr. Webb of Manocha. Good morning, Mr. Manocha. Should we begin? Can you hear me? Uh, do I have your permission to start the show? Right? That'll be lovely if I can have that. Just let me send a message to folks on WhatsApp. hmm Done. So if I'm audible, we can begin. Yes, says Mr. Class Apart. Yup, audible. Beautiful. Let's have the show that we deserve, folks. Good morning, says Mr. Amrit Raj. Good morning, Mr. Raj. Let's begin. I changed the camera angle today. I've got a lot of feedback saying that from people saying that when the camera is a bit lower, right? And I'm looking down at people. And I'm like, I'm not looking down at anybody. But they said that that camera angle is not pretty. And I got that feedback from multiple people. So I was forced to cut short the beautiful view of my library. So the top shelf is not visible, which hurts my feelings. But I'm a man of sacrifices, right? So let's begin. The show that we deserve. The show that we deserve. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum bum bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, we gotta follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all we need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Ah, my God. It's beautiful. Let's do it again. Healing. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we're in this together. That's such a beautiful thing to say. With that out of the way, let's begin. So, the prospect on gold has been rising, as we talked about the global economy, the financial fiat system, and the risks associated with it. Yet, the prices of gold have sort of tapered down and they're falling, right? So, if you look at GLD, it fell about 3% yesterday. In just one day, it fell about 2.78%. Now, why is gold falling while the prospects of gold are kicking in? So, we talked about JP Morgan's report, which said gold could go up to $8,000 an ounce in a couple of years by 2028. Now, why is every projection of gold and silver going up while the prices of gold and silver going down? Is that a good question? Do you like the question? And the answer is also not as simple. It's also as convoluted as the question. The answer is basically it's become so volatile that the powers that be are wanting to stabilize the system in every way possible, while participants of the market are trying to hedge the risk. So I'll say that again. The powers that be of the financial system are trying to stabilize the peace as much as they can by kicking the can down the road, right? While the participants of it are hedging the risks. So we have conflicting information pieces coming on from all over. So one piece says that central banks have been hoarding gold, right? Central banks of all over the world have been looking at gold and not US treasuries. At the same time, we are also looking at all the banks, the JP Morgans of the world, Morgan Stanley, uh, re-rating their gold projections. At the same time, we are also looking at fiat risks, which are high. The American debt reaching $38 trillion, dollars, right? But at the same time, the conflicting signals come, which sort of paint a rosy picture of the world when, let's say, Mr. Trump meets Mr. Xi and finds out that the trade deal is, so to speak, going to be neutralized or going to be normalized or is going to improve, right? The tariff situation of the world is going to get better. Now, whenever such a news comes, right, let's say US dropping its interest rates or US meeting China in a favorable trade condition or US basically rallying the whole Southeast Asia along, gold prices sort of taper down once again. And that's what's happening. And that's exactly what I told you is the situation. It's very complicated and it's very hard to predict where this thing goes, at least in the short term. In the long term, everybody knows what it is, right? Everybody knows that the system is extremely fragile, and in the long term, it makes sense to buy gold. But what does it happen in the short term? And that's why, if you remember, a viewer of Thinker's Frequency came along and she said, I had bought gold last year and it went up 85%. I'm thinking of selling it, right? And what did I respond with? I said that gold is not supposed to make money. Gold is supposed to not lose money, because gold is the hedge against the financial risks that exist in the fiat economy, right? So that's what's happening. Very, very confusing signals. So if you look at silver going down 18%, but all the prospects of silver are getting re-rated. They're saying that the uh, white metal will essentially return 24% in a very, very short duration of time. So once again, the right way of looking at gold and looking at silver is not a way to quickly double your money, right? But it's a way to hedge yourself against a possible doomsday scenario. This is what we've been saying since the beginning, and it's pretty solid how things are panning out. So never did we say that it's a sure bet, and it's the way it's transpiring. The whole situation is very, very interesting. What do you think about that? In the meanwhile, while US and China are meeting with whatever good news they have to offer, essentially there is no good news, right? US discovered that it has no chips, so it's saying that we're going to reduce tariffs if you're going to reduce the rare earth mineral blockade, right? The beauty of the situation is that rare earth mineral situation or the trouble didn't exist until April. So it is a new negotiation leverage created by China. This wasn't a conversation till April. You got to realize that tariffs came first, rare earth minerals situation came later. So it was one of the many choke points China has to hold the world ransom, right? Yet it worked. Yet it worked. So US came out with tariffs and it expected China to bend in different ways. China said, okay, let's block your rare earth magnets. That's it. Very small part of the economy, but let's try and do that. And the whole world came on its knees. And so now that it's going fixed, right, getting fixed, that US is sort of tapering the tariffs, everybody's happy. But why are you happy? This is business as usual going back, right? This is us going back to the normal that existed before April. How is this a good news? It is not a good news, but it's looking like a good news, right? Because China has started flexing muscles. While that is happening with US and China, the Russian-Ukraine war is not resting. Russia has taken some villages. Russia has also backed out of the plutonium deal, whatever that is about the nuclear play, right? So Russia is where Russia was, and there is no respite for the whole war situation. The whole war situation in the Middle East is also not very pretty. So overall, the world is where it was, but some good news is essentially coming along so that people's faith in the whole fiat system, clicks. I was watching Mr. Peter Thiel's interviews. I watch all Mr. Peter Thiel interviews, right? Speeches, interviews, articles. Whenever he contributes, I listen and I follow very, very deeply. So he said that the dollar problem, the dollar fear, the dollar fragility has been a talking point since the 1980s. So he says that the fears around dollar are not new in the world of finance, right? However, when those fears existed, let's say in 2009, 2008, right? Uh, the growth rate of the world offset the debt uh, refinancing costs because there was so much of growth happening due to zero interest rate policy. Interest rates had sort of tapered down, and when they had tapered down, the growth offset a lot of debt troubles. But now, since the growth has not sort of kept pace with the debt rise, it is a serious concern and we ought to think of it. And that's exactly why you're seeing whatever the US is doing in this day and age. It's basically trying to kick up the growth with whole AI and data center play. Now, that's what's leading to the entire growth in the US economy, as we've talked about, right? Without US data centers and the AI play, the GDP growth in the last quarters or so is 0.1%. Otherwise, it's 3.8%. So you can imagine what they're trying to do, right? They're yet again trying to go the growth path again. They want to spear up the growth so that they can offset the debt troubles. And as they do that, they're also trying to reduce the interest rates, right? So a lot of action happening in the world. While the world goes on, India is going on. India is very hot, very hot. It's a hot, hot country. When it comes to IPO fever, of course, 2.2 lakh crores have been raised in the primary market. A lot of action happening in the IPO play, and it's not stopping down. It's not stopping down at all, right? So if you look at the unprecedented stream of public offerings hit the market in the past 5 years. So the numbers are huge. 111 issues this year, 2.2 lakh crore raised, and it's not stopping. So there's a lot of IPOs in the fray, and even the foreign investors, the FPI guys, right? They are very interested in the IPO story because IPO story looks like a sure bet, right? Nobody is as sure of the Indian equities, the secondary market, the listed play, because it says, we have higher price to earnings than the emerging economies, than the West, than the East, and everywhere. So we are expensive on the secondary play, but we are not expensive on the primary play. Says the money, doesn't say the sentiment. Like when you talk to these people, they're very bullish on India. They say that India is a bit expensive, but it's a perpetual growth story, so we are very happy about it. However, if you look at the numbers, right, the money, the secondary market is basically taking money away, while the primary market is green, green, very green, very, very green. There's a message. Uh, Mr. Karthik Manan says, Hari Om. Hari Om. I want your thoughts on gold correcting amidst US China. Subha Subha. I just gave those thoughts, sir. So I hope you're happy with that. Let's move on, folks. So, of course, we've been talking a lot about the demand play, the domestic demand, right? The GST rationalization, the personal income tax rationalization, everything that the government has been trying to do to get the demand chart up has been working, of course. So we talked about how this was all going to play out after September. If you remember, we talked about it began in 22nd of September, right? That's when the Navratras began. Then the whole Diwali thing happened, and we talked about, now viewers of Thinkers Frequency would remember, we talked about how the real quarter will be October, November, December, right? Did we not say that? Did we say that? I feel like an African lady in hindsight. What did I tell you? Didn't I tell you? Well, what happened? Exactly what I told you. And when did I say it would happen? A long time ago. And that's exactly what's happening. Retailers stock up as demand seen continuing after festivity. The report is, if winter comes, can binge be far behind, right? Winter season crucial accounts for 15 to 25% of annual sales, 70 to 75% of sales accounted by North and East. Colder than average, revival post GST. So that's exactly what's happening. This is going to be the quarter that decides the fate of the country. And while it does, there's a lot of capex already happening. A lot of capex already happening. So we've talked about Adani's capex story that happened last. We discussed it a couple of days ago, I guess, right? uh, More companies are following through on it. Electronics manufacturing is up. ECMS, by the way, is doing very well. ECMS has some story to play out. I'll come to that. METI clears 5,500 crore ECMS investments. Nod for Keynes, Circuits India, SRF, and so on and so forth. Right? ECMS is, of course, electronic component manufacturing scheme. Electronic component manufacturing scheme. Now, I'd like to draw down on a personal experience that I had, an anecdote, so to speak. So, I was talking to a professor at IIT Delhi who is into electronics and communications manufacturing, and he was very, very bearish on the whole manufacturing play. He said nothing is gonna happen. Nothing is gonna happen. He said the defense play, the manufacturing, we don't do any manufacturing, and we don't do designing. And so my counter to him was, we didn't do manufacturing, we will do manufacturing, we are doing manufacturing. And he said, we won't do manufacturing, it doesn't matter whatever we do, it's going to be, nothing. And I said that we are coming up with chips, right? We are coming up with the whole India semiconductor mission. What do you think about that? And he said, we've been hearing that since 2014 and 2012 when we were kids. And I'm like, okay, but what do you think about the participation of the private sector now, right? Or the investments that have been coming out now, like $18 billion Tokyo Electron coming. And he said, we've been hearing those stories for a very long time. And I said, we didn't have factories until 2017, right, of smartphone manufacturing. What do you think about that? He says, it doesn't matter. And I said, somewhere we need to start, right? And he said, we've been all that page for a very long time. So I said, let's say when we have an assembly unit set up and we bring down completely knocked down parts, right? And we start pulling them together, right? That is a start. And this is where he said something very, very interesting. So he said that has been going on in the radar business for like 60 years. We have brought components from the West, from the East, from China, and then we've been putting them in the box as you speak for like 40 full years, right? Nothing happened there. And then I had a gotcha for him. So I'll say it again. His reading of the situation was that nothing happened because we've been doing the assembly of the boxes of radars for 40 years and we didn't go those downstream second order effects as you've been suggesting. So nothing is going to happen in the next wave as well. And there was a gotcha. So what's the perfect answer to that situation, folks? What do you think? And that sort of silenced him and made him think, right? So what is the answer to the perpetual, let's say, pessimist view of the Indian manufacturing play? Let's say in defense segment. We were putting boxes together. We have been doing together. One view is that it's going to change. We're going to make new things. The other view is it's never going to change because we've been doing that for 40 years, right? Mr. Sumant Kumar says smartphone exports. And Mr. Klasapat say, is it me or the audio is breaking in sometimes in between? So viewers, if the audio is breaking, please let me know. I'll check the system. But smartphone exports is not the answer, Mr. Sumant Kumar. What do you think is the right answer to the, let's say, conundrum or the problem which says that nothing is going to happen because we've been doing the box assembly thing for 60 years when it comes to defense manufacturing and radar? So the answer, think very specifically in the defense manufacturing play or the whole defense manufacturing paradigm, right? Or manufacturing paradigm in general, but focusing on defense. What's the constitution of defense manufacturing in India been? That is the argument. That is the change which has happened, right? What is that? Uh, Mr. Manjunath Madhaval says India spends about 4.1 to 4.6% of its GDP on education, roughly on par with global average, but lower than the US and South Korea. Okay, I don't see how that's relevant in this situation. The answer is India doesn't have other choice now. World dynamics are different, so it has to happen, says Mr. Abhishek Sharma. Well, that's obviously a very right answer. Mr. Manjunath Madhabal writes South Korea 5%, with global leaders in innovation. This caps highlights limiting the nation's potential. Okay, so Mr. Manjunath Madhabal is more on the side that nothing will happen, I guess, because the education R&D spend is less. Now, the answer is very simple. The answer is very simple. It's like the one, it's called a tent pole answer, right? Once you break that tent pole, the whole argument of the other side sort of crumbles. It's the tent pole argument. The tent pole argument is that defense in manufacturing until now was purely a government play. There was no participation of the private sector in defense. And it's only recently, like very, very recently, that has changed. What do you think about that? Necessity is the mother of invention. Of course, there is a need for India to essentially shape the defense manufacturing play, right? But uh, how is it going to be different from whatever has been happening in the past? The answer is that there was no participation of the private sector in defense manufacturing. If you look at it, it was just HAL, it was just PSUs, it was just these guys. There was no real play when it came to private sector, and now there is. So now when you hear Mr. Rajnath Singh, he says private sector needs to take up 50% of the defense play, right? That's what he says. So now when it comes to the private sector, so whenever there is the government play, right, where the government is essentially responsible for manufacturing and innovation, you know where that goes, right? Government is very good at incubating things, but it's not good at, let's say, making new things at scale or even starting new things from scratch, right? The ideation of it, the plan of it, that's where the government is good at. That has always been the case. It has incubated a lot of good things. But Indian government or Indian government force is not the beacon of innovation, so to speak, right? So, job as usual, you bring down something, completely knock down parts, you put them in a box, that's your product. Even if it's something of strategic importance like a radar, right? You do that. But now that changes. Now that changes in a big way. And the answer is very simple. There was no private company in the past who did that. Which is sort of a tent pole argument. What do you think about that? Does it make sense to you? Does it make sense to you, folks? Right? I mean, I hope it does. I hope it does. So, if you look at Mr. Rajnath Singh's statement right now, I'll just pull it up. Just 1 second. Right? Makes sense. Just 1 second. I'm just pulling out his. So this is a conversation I had like day before yesterday with this IIT Delhi professor, right? And he was very, very bearish on the entire segment, which was very sad because he was in a position he had, right, or just private sector to increase share in defense manufacturing to 50%. So whenever private sector comes along, right, whenever individual entrepreneurial will comes into play, that's when you think about maximalization of any product, right, or any effort, because an individual ambition comes into play. The government is not the source or cannot be the fountainhead of individual ambition, right? Individual ambition is very important. Speaking of individual ambition, folks, there's a very, very important news. Generation 6 nuclear reactor funded by Mr. Bill Gates has gotten an approval from the US play, and it's now just the safety approval that is on. So before safety approval, there's you know, a technology level approval that they've got it, but now it's going to be the safety approval, and then US will have a generation 6 nuclear power play, and which is going to change everything, so the beauty of this project is, and the beauty of this whole story is, that this particular thing was funded by Mr. Bill Gates in 2006. So 2006, about 19 years ago, Mr. Bill Gates funded a nuclear technology which had no chance of working, of course, which had a very, very limited chance of working. But now that investment has sort of panned out, and in a few years, that investment is actually going to be in the market. So essentially, what you looked at was an ambition which spanned 25 years from idea to market. 25 years from idea to market, and that was the gestation cycle for the whole nuclear project that Mr. Gates funded. That is individual ambition, that is foresight, that is something that America has. An American, what America's strength lies in, a lot of people think about American exceptionalism. American exceptionalism is also an argument against de-dollarization. So if you look at the guys, these people, let's say Mr. Warren Buffett, sir, he's like never bet against America, right? So American exceptionalism is not just a sentiment, it's also an economic argument that if, let's say, dollar is de-dollar taken away, what will become the global currency? Zambian kwacha? Yuan? No, yuan, there's a lack of supply of yuan, right? How is yuan going to be spread across the world to take on dollar? Even if US loses its economic play, dollar will still be the currency. And why? Because of American exceptionalism, because of how the billionaires of America have sort of shaped the country and the world. So if you look at whatever is happening in the world of robotics right now, right, these things were planned like 15, 20 years before, and they're now coming to play. So they're saying that the Optimus robot, the humanoid robots, they're going to be out next year for the world. They're already working. So Mr. Elon Musk recently came out with a statement. He said, if you go to the Optimus facility, the manufacturing facility, it's just robots walking around, and you'll go to a robot and you'll ask for directions and it'll gladly help you, right? And that sort of thing is never possible, let's say, with a government entity, or so that's where things are changing. Finally, the mantle is being taken up by individual private sector ambition, right? That was never the case, at least with defense manufacturing. That's what's changing with India, and that's exactly what's going to lead to changes as far as everything is considered when it comes to manufacturing of products. Once again, all business outcomes are the result of political will. Those billionaires in America, they've been able to do what they've been able to do because of political will, and so God will, India will be able to follow those steps as well. Moving on, folks. Speaking of billionaires, Starlink is leasing a lot of office space in Mumbai, local base firming up. We've talked about that, right? We've talked about that. We've talked about the demand. Let's move on. We won't talk about politics, of course. God damn it, man. Ha! Political discussions, man. Anyway. So the Tata Trust situation, 28th, today's 28th, this is when the real stuff happens. This is a very, very important play, whatever is going to happen as far as the Tata boardroom battle is considered. We've talked about this, Mr. Mehli Mistry against Mr. Noel Tata, and so on and so forth. Very, very interesting how it shapes up, right? A lot of things. The fate of the country essentially depends on Tatas. or people like Tatas, as we just mentioned in the last discussion. It's a nice segue. This is why these business empires are more and more important. So if you look at Indian business empires, they have not yet shown that kind of foresight or that kind of will to forge at least technological innovation. So you've got to give Mr. Adani, Gautam Adani, some credit. So what they've not done in technology, they've done in, let's say, infrastructure, right? Because they've been dreaming up the infrastructure of the future. So what is India's response, or let's say analogous experience to the whole nuclear play, right? The reimagining of Dharavi. So Dharavi, the Mumbai Dharavi redevelopment plant, is essentially as ambitious as anything, right? If you're reimagining the whole Dharavi slum, which is Asia's largest and stuff like that, it's it's something miraculous. And groups like Adani have been doing it, but unfortunately, we've not seen that kind of ambition when it comes to Indian business houses and billionaires. Sans the very notable exception of Reliance when it came with the whole geo play. That sort of can be called as something exceptional. The whole data democratization and so on and so forth. Although we can argue its effects on people in general, right? It's not that clear, but yet it was a bold move. Bold move. Moving on, there's a lot of hiring in construction sector. We've talked about that. We have talked about that, so we'll move on. Speaking of moving on, folks, I try to remind you, I always forget. Do whatever you can do. Share this, on WhatsApp status. Bring more people in. We need to grow in order to be sustainable, right? Also, let's do that donation thing. If you're in, right, we can have that. We want to hire a, an intern kind of a person who can create shorts of our videos so that we can grow organically, right? Once those shorts come out, we'll be very happy. And then, of course, the whole labeling of an episode, marking of whatever has been discussed, and so on and so forth. We are looking at some, there's a StreamYard thing where we'll be able to do the TV thing, right? The panel where viewers of Thinkers Frequency can join in and do their analysis, share their analysis of situation. So we'll split it up, do a panel discussion kind of a thing, right? For that, we're raising money. So it's not a commercial endeavor, but it's a community kind of a thing. So let's begin that as well, right? How can you do that? I can share my Patreon link on my website. It's on my website, Patreon link. You can go there or do whatever. Moving on. So Volvo bets on high demand for trucks in India amid lull in US. India, a key player for Volvo's regional value chain, to see more investments. So this is once again in the direction of capex, right? Companies like Volvo are taking a look at India. Now, why do you think Volvo is taking a serious look at India at this juncture of the country's journey? What do you think that is? We've discussed about this. This has to do with some GDP play and how this pans out and how those things lead to more growth and so on and so forth. We've talked about that. And this is also one of the two very important pillars of the economy. One is domestic consumption, one is private capex. When this gets solved, a lot of things get solved. But why is Volvo looking at Indian market, right? Especially the trucking business. GCC, says Mr. Sumant Kumar. No. GCC is, it is a very big story. We'll come to that. 1800 GCCs right now, hiring about 1.5 million people, over 1.5 million people, raising their offices in the country, doing a lot of good work, right? There's this concept called micro GCCs, which are picking up like 25, 50 people, scaling up to hundreds. So that's going on. GCCs are very important, but they're a very different story. Why is a company like Volvo, what does it signal when a company like Volvo says that we are going heavy on India? We've talked about this. This has to do with, I'll give it away. If I give it away, like I'll be giving it away. But can you guess? This is a very important part of the, I'll give you a hint. It's related to Mr. Nitin Gadkari. Well, I gave it away, right? We gave it away. No? Anybody? We've talked about this. Come on. Nobody? No? Even after Nitin Gadkari? It's the logistics play, folks. It's the logistics play. So, trucking. No, 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 no. Ethanol, says Mr. Manjunath Madhabal. Expressways, Mr. Weber Manoja. So, it's basically the percentage of GDP of logistics, which right now stands at 9%, 10%. Mr. Nitin Gadkari wants to go lower, and with lower logistics cost, the GDP expands. With every $42 billion India saves on logistics, the multiplication factor of that money leads to a lot of good outcomes. And a company like Volvo is the centerpiece of the road logistics play, right? The trucking industry is the centerpiece of the whole logistics play. And when that logistics play starts getting new investments, you know what's happening, right? So there's an EV truck, EV bus revolution happening in the country. And EV bus revolution, when it's coming in, so you're seeing all sorts of EV trucks and these startups and these companies sort of getting those investments, bringing those investments in, even government warming it up. Now, why does the government want to warm up to the EV truck play? Of course, because of, you know, all sorts of cost and environment reasons. Diesel trucks are trouble, right? So this is like a second coming of the whole trucking revolution in the country. This is why we are seeing Volvo going heavy. So the chief says, today we are outsource our components from India for our trucks globally. Volvo Group is manufacturing engines in Pithampur, Indore. This means that India is a manufacturing location integrated into our global play. So there's a lot. Going to have tough competition from Ashok Leland, Tata Commercial Vehicles and stuff. But Volvo is, of course, one of the leading players. So whatever competition they get, it's going to be very healthy for the country. And it's going to be very healthy for, everything. Mr. Karthik Menon writes, also not a bad compounding investment. Of course, of course. So this is a very, very good news, because every bit of money we save. So viewers of Thinkers Frequency obviously know that, but people before, they were confused. Like, why would you want to reduce the spend on logistics as a percentage of GDP? Right? That was a very big question. Now, why do you want to reduce the spend of logistics from 10% to, let's say, 9% or 8%? Why would you want to do that? Because the spend on logistics is basically a proxy for sort of inefficiency in the system. If you can bring the cost of transportation down for freight forwarding or whatever, it means that things are easier to ship across. If things are easier to ship across, there's more velocity of products. With more velocity of products, there's more velocity of money. With more velocity of money, there's more activity. With more activity comes more jobs. Come more jobs. With more jobs come more, spending ability, and so on and so on. So it's an upward spiral. And a company looking at India, a company like Volvo looking at India at a greenfield technology like EV trucks, that's a very good thing. That's a very, very good thing. So that's what's going on. Nexperia triggered REE. Nexperia. I've heard that company's name. Nexperia. What was Nexperia? One second. Nexperia. Semiconductor manufacturing in Netherlands. Yeah. So what about it? Triggered RE. I don't understand, Mr. Karthik Menon. Sorry, sir. Let's move forward, folks. So we've talked about that. With all of these people will come charging infrastructure. With the charging infrastructure, we'll see more trucks and so on. Right now, the whole EV revolution in India is having a cold start problem. So even with EV vehicles, our EV vehicle share as a total share of the car sales has gone up from 2.2% to 4.4%, right? But 4.4% is nothing. China is almost half, 50%, 40%. That's where China is. So we are at 4.4% and we are sort of plateauing. We are already showing signs of plateauing. Overall, the global EV sales are also plateauing, but that's after having reached a stage of maturity. India's EV thing needs to solve for its cold start problem, and that is basically the range anxiety, the whole charging infrastructure, and so on and so on. Moving on. We've talked about that. So there is a news about Ratna categories. So Indian PSUs right now, they are categorized as Maharatna, Navratna, Mini Ratna. Right, that's what they say. So two new Ratna categories to forge next gen CPSEs. CPSEs is of course Central Public Sector Enterprises, right? So they are thinking about new categories, two additional categories for Maharatna, in addition to Maharatna, Navratna, Mini Ratna categories. So right now India has some, how many Maharatnas do we have? One second. Yeah, 14 Maharatna, 26 Navratna, and 74 Mini Ratna CPSEs. These Maharatna, Mini Ratna, Navratna CPSEs basically decide how much capex they can spend without it, what are the compliances, 3-year PNL, what is the revenue rate of these companies. That's how these companies are allocated this status. And now we're going to have more, so that these companies could have a little more of independence and leeway and better classification, because basically these three classifications might not be enough. Moving on. Pilot rest rules, airlines get breather. So this is an ongoing story, folks. We've talked about this. This has been going on for a very long time. So viewers of Thinkers Frequency must not be surprised about this. Airlines were trying to lobby against the pilot rest norms. Do you remember that? So pilot rest norms were a problem. The regulator wanted better resting sort of timelines for pilots, so that there's no fatigue led problems when it comes to airline safety and security. And that was proving to be a bit of a drag for airlines, because they have to run tight schedules and so on and so forth. So right now they've gotten a breather from the regulator. Civil aviation regulator softens night duty hour limit ahead of rollout of rules, right? So these people said that we have a problem as far as crew shortages is considered, and if we are going to go so heavy on pilot resting norms, it's going to be bad for the airline industry. So did the regulator just trade off safety for efficiency? Isn't that the natural question to ask? Did the regulator just trade off safety for, let's say, capital efficiency of airlines? Right? If pilot rest rules have been softened by the regulator at the behest of airlines, did we just trade off safety? Because why did they come out with those norms in the first place, right? They came out with those norms in the first place because they believed that there are some safety concerns, right? That's why you came out with those, right? And if the airlines told you, but that following those safety norms would lead to problems when it comes to capital efficiency, did you not trade capital efficiency for safety? And if you did that, isn't this a very, very awkward compromise? So I'll just give you some numbers. Among other changes, civil aviation last year amended definition of night for pilot duty, extending the period by an hour from midnight 6 a.m. to midnight to 5 a.m. Right? And DCGA has now allowed pilots to do 3 landings if the duty period falls between 12 a.m. to 1:55. So safety should always come first. Why can't they have more pilots? That is an obvious question, says Mr. Abhishek Sharma. So they count many things. That's exactly the point. That was the point behind this particular regulation, that you bring more people in. But airlines, as I told you, is not a good business. So these people came out with their own story, and now the aviation regulator has softened their stance. Higher costs ahead. Crew strength may need to rise 3 to 10%, but still lower than what it was supposed to be earlier. Anyway, folks, moving on. It's not funny when you're traveling in an airplane, right? It's funny right now, but it's not funny when you're traveling in an airplane. Users call Geo leads BSNL pips Airtel. So there's new report on user additions, right? Geo adds users, of course. Airtel adds users. Even BSNL adds users. Who loses users, folks, in the telco play? Who do you think is losing users? So I told you, Geo added most number of users. Surprisingly, uh, Airtel was pipped by BSNL. So BSNL added more users than Airtel, right? Who lost users? We. Correct. It lost 7.5 lakh users last month. So, uh, 3.25 million users were added by Reliance. BSNL added 4 lakh 37, right? Uh, Vodafone lost uh, 7 lakh, 7 lakh 44,000. Mr. Weber Manocha says BSNL loses. No, BSNL gained more than Airtel in this particular segment of time. It's Vodafone who lost. And I always blame Abhishek Bachchan. Even though he's long gone from the ad campaign, I still like to blame him for Vodafone's losses. It's just fun, right? There's a lot of action happening as far as Yes Bank and Mr. Anil Ambani's debt problems. So we won't discuss that because we've covered that in a lot of depth. Shell entities used to route Yes Bank funds to Anil Ambani companies, says CBI. Well, I'm definitely surprised. Now, I didn't see this coming, right? Mr. Anil Ambani's group was turning around. It was turning the corner. It was coming up with some good news, all in all, right? And the infrastructure play, they were raising 6,000 crores and stuff like that. I didn't expect government to round him up for an old transaction. I expected some sort of, so definitely surprising. Now, when I say government, I know it's CBI. CBI is not the government, but it is, right? But it is. So it's very weird whatever is happening with Reliance Group, and it's not slowing down also. So very, very weird. Anyway, LNG terminals may need to raise storage 10%. To amend registration rules, aim is to build cost-effective emergency gas reserves. Well, that's obvious. By the way, Russian LNG supplies are also going to be up. Mr. Amrit Raj has a comment. The irony is India is one of the highest populated countries, yet has shortage of talent in almost every sphere. From judges to tech talent to global entrepreneurs. That must show how much we've achieved. Yeah, you're right. You're right, Mr. Raj. Actually, the talent shortage, or let's say the skill shortage, is a direct consequence of the education shortage, and that has always been a very, very lackadaisical part of the Indian economy. As Mr. Manjunath Madhabal also said, right? India spends much less on education as a percentage of GDP as compared to other people, but we have our reasons for it, right? Everybody wants more to go in a particular sector. So let's say if you talk about education and skilling, you would want more to be spent there. Defense, you'd want more to be spent there. You would want to be spent on health, right, as a percentage of GDP, and so on and so forth. But it takes time. These things need to get offset very, very carefully. Unfortunately, whatever money India is spending on subsidies is the culprit. Now you cannot take that away as well, right? The whole, because that's where the political aspect comes into play, right? And political will in India will never be as smart, or say as strong, to cut on that play. So we are just rolling out more and more subsidy plans which are non-productive expense, right? And that is basically killing the economy. Unfortunately, that doesn't even have a solution. So we'll have to make do with whatever little capital we can allocate in that area. And that's sort of India's undoing, unfortunately. Moving on, 42,500 crore capex Adani ports to anchor Maharashtra's maritime growth. 15 MOUs worth 56,000 crore for ports, shipyard, tech, and so on. So what did we tell you about the maritime segment? What did we tell you, folks, about maritime industry? About Mascot Dock, about Cochin Shipyard, about GRSE, Garden Reach Shipbuilders and Engineers. What did we tell you about the shipbuilding play? We said the political will has gotten aligned to shipbuilding as an industry when Mr. Modi came out and said that shipbuilding is the mother of all heavy engineering and we need to spend a lot in shipbuilding, on shipbuilding. Suddenly the government woke up to the fact that we are like spending $70 billion on foreign ships every year, despite having such a large coastline, despite being a peninsular country, right, with an extraordinary coastline. And despite like 60% of the world trade going through Indian Ocean, why are we spending $70 billion? $70 billion is roughly, how much is it? Like $10 billion. $1 billion is 9,000 crores. 10 is 90,000 crores. So 6,30,000 crores. So why are we spending 6,30,000 crores on foreign ships every year? It's like almost half of what we spend on oil, right? So we need to wake up to that. But the good news is that we have finally woken up. Whenever a good thing happens, the question we often ask is, why didn't you do it earlier? That is a very natural question to ask, but we are finally waking up to it. So, a lot of action happening there. Maharashtra has secured an investment of 56,000 crores. Adani Ports will invest 42,000 crores to expand Digi Port and related industrial facilities, while JSW 3,000 crores committed for the expansion of Jaigarh and Dhangarh ports. So, a lot of action happening on ports, right? Which is great, which is awesome, which is awesome. And whenever something awesome happens, sometimes we always think, why didn't it happen earlier, right? Or why didn't we do it earlier? Moving on. So RBL is going to be taken over by, who was RBL going to be taken over with? It was NBD. What did DBS? It was a Singapore bank, right? I guess it was a Singaporean bank. No, it was Emirates NBD. $3 billion. Emirates NBD has agreed to buy RBL. So it's basically asking to raise this FDI ceiling to 74%, right? And with that, the Emirates Bank will be able to take over, which was the Singaporean bank which did very well. Do you remember that? It was Lakshmi Vilas, which was taken over by a bank which was doing very well, which wanted to be a complete bank now. Do you remember that? Folks, we talked about this. We had a discussion about Lakshmi Vilas Bank having taken over by a Western bank, and it's now doing very well. Lakshmi Vilas Bank takeover. DBS. DBS says Mr. Sumant Kumar, you're right. I sort of, does it ever happen to you folks that when you read a lot, or let's say when you're absorbing a lot of information and from a lot of sources, sometimes the data points get muddled up? Does it happen to you? Because it happens to me when I miss the critical names, and sort of makes it less impressive, right? Because when you know the fact, when you have the knowledge, and you know the second order effects of the knowledge, you know it conceptually, but somehow you miss out on that particular knowledge, and when you're talking about it, it's suddenly very less impressive, right? So a good way to sound smart is by not missing out these critical non-consequential items such as names, right? How does it matter if it was DBS Bank if you know the entire story, right? But yet if you're going to have a conversation, right, with somebody, just a coffee table conversation, if you're not being able to recall that name, suddenly your argument or suddenly your conversation will sound much, much less impressive. Have you ever felt that, right? And I feel very bad about myself when I miss out on those details, even if they don't matter, right? But that is something that I always think about. Moving on. Axis Bank 500 crore Lavasa corporate debt on sale, right? Stressed asset sales are always a good good bet for whoever buys them. Stressed assets, one of the most heavily rewarding careers in finance, in investment banking, of course. Axis Bank puts 500 crore Lavasa. So Lavasa Group was going into bankruptcy since 2018. That case is being dragged on, right? So reserve price is set at 80 crore. 80 crores is how much? 80 crores is about 15 cents on the dollar, essentially. That's what these people are looking at, 15 to 16 cents on the dollar, right? And then somebody who's going to buy this debt is going to try and make the most of it. That's the business model of stressed asset. That's what's happening. Moving on, folks. A lot of action when it comes to geopolitics, which we've already talked about. Arnold tightens his LVMH control with a $1.6 billion buying spree. So LVMH, the world's leading financial empire, The patriarch of that empire, Mr. Bernard Arnault, right? He's buying $1.6 billion shares to firm up his stock. Now, this is very much like an old school, business mogul move. So, I read the biography of Mr. Sam Walton. Sam Walton is the founder of Walmart, right? And what did he talk about when he wrote about his holding in that? He said, have asked the family to never sell the stock. Never sell the Walton stock, the Walmart stock. And that seems to be the nature of old school businesses, right? They are never selling their stock. They don't want to, even with the Tatas, they don't want to go public. They want to keep it in control. They are always holding on to their stock, right? And this is very much a symptom of that generation's thought that you don't do that because control is very necessary. New age businesses, on the other hand, in the parlance of the VC ecosystem, they have to sell stock because it's a very different time. So generationally, building businesses and sustaining businesses has changed by leaps and bounds. Moving on. The company's market cap has grown to 300 billion euros, which is extraordinary, right? 300 billion. Strong conviction. Moving on. There's a lot of action happening on AI. We've talked a lot about that, so we won't say that. They're saying that the videos, there's something called ASMR. Do you know ASMR videos? It's basically those, paper crumbling sounds, origami folding, clicking sounds, and so on and so forth. They're supposed to be very relaxing for people. Some paper rubbing sounds. So the full form of ASMR is, of course, an autonomous sensory meridian response. Autonomous sensory meridian response. How many of you have experienced ASMR videos or are fans of ASMR videos? Have you ever experienced anything of that sort, folks? Nobody? Nobody? So ASMR is basically a very big, category of videos. It's catching on because people find these videos very relaxing, right? They are said to be very calming, right? Surreal sound. And AI is finding its niche in these particular videos. So let's say a knife cutting a particular vegetable or something, a jelly and so on. So jelly cutting videos and so on and so forth. So that kind of content, AI has found its niche. It's finding a lot of viewership and sustained viewership in ASMR videos. Do you give a shit about that? I don't. But it's important, right? It's important. Moving on. There's a lot of talk about Lenskart's IPO now because it's finally coming out October 31st, right? So huge interviews. Lenskart founders to pocket 1,500 crores, 1.2 crore, 1.2 thousand crores, 1,200 crores essentially. Mr. Piyush Bansal to get 824 crores. His sister, Miss Neha Bansal, 41 crores. And Amit Chaudhary and Sumit Kapahi to get 115 crore each as a part of the IPO proceeds. That's very, very good news. I'm very happy for them. So we've already talked a lot about Lenskart's IPO. Wouldn't say more, right? Speaking of, we've talked about AI. Do you remember that this is a developing story? We've talked about how the government was trying to label AI content when it came to videos and pictures, right? And a lot of people asked, would India regulate AI as well as it should? And I said, regulating AI is very hard because if you regulate AI, it just slows it down and you don't want to slow down because other people will catch up. So it's a mutually assured destruction play. So even if the concept is this, like AI can kill humans, right? AI can kill humans, Terminator thing. But if you don't make that AI, somebody else's AI will kill your humans. I mean, your kind. So you will have to make your AI. So at least it can, even if it kills humans, it'll be your AI. So that's the kind of thought which is going on. Mutually assured destruction, it's called. Right? Regulation slows it down. That's the bottom line. Now, this is a developing story which points it out. Meaty had pointed out that AI videos will have to be labeled, 10% screen size will be pointing it out. The industry has come forward, says that it's regulatory overreach. They say it's going to hurt the industry in thousands of ways. So that's their argument. And that argument sort of slows the regulatory process down. It basically, you don't know how the government will respond to it. There's going to be a lot of to and fro. And by the time this regulation has any meat, it's going to be too late, right? So regulation is always a bit of an issue when it comes to places like these. And suddenly, this is definitely what's going on. So it's an evolving story. The government had said it's going to label it. Everybody was okay, it's going to label it. Then the industry comes forward and says, please don't label it, it's going to kill the industry. Then the government is forced to rethink its stance, the regulators, and this goes back and forth. Moving on, nano GCCs, we've talked about that. 20% growth. Small GCCs begin from 25 people, go up to 100 people, and so on and so forth, right? So we've talked about this, folks. Meaty 5,500 crores for ECMS, Electronic Component Manufacturing Scheme. We've talked about that as well. So that's what I have for you today, ladies and gentlemen. I hope you had fun. I hope this added some value to you. You know what has happened? Freshworks, by the way. Freshworks was the only Indian company to have gone public in the US, right? Its market cap has fallen down by like 56% since it came out, right? Once again, Mr. Sanjeev Bikhchandani sir, was right when he said it makes sense for Indian companies to go public in India because there's a lot more demand, right? So SaaS play, it has gone completely out of fashion there, and the company's stock price has been beaten down. And once again, Sanjeev sir's foresight was so right, right? So right. So when you look at all the companies that are going public in India, they're very happy with whatever is happening, most of them, if not all, right? But not so much for Freshworks. So some people are just pretty solid when it comes to their analysis. And what we want to be is to be one of them, right? To be one of them. That's the goal. We want to be as tight as Sanjeev sir when it comes to analyzing things and predicting the future, or maybe creating the future. With that, we come to the end of the 155th episode of Thinker's Frequency. Our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in, right? It's 9:12. We're going to punch in anytime soon. I wish you all a beautiful day, personally and professionally. I'll see you tomorrow, same place, same time, hopefully. I should thank Mr. Vaibhav Manocha, Mr. Class Apart, Mr. Amrit Raj, Mr. Piyush Sethi, Mr. Sumant Kumar, Mr. Manjunath Madabal, Mr. Abhishek Sharma, and everybody else, Mr. Karthik Menon, and everybody else who joined, right? Thank you so much. I hope it added value to you. I hope you had fun. Let me know how do we do that? Should I share my patrons link with you? Just 1 second, folks. That way Razorpay is gonna take 2%. But yeah, we can do that. Just 1 second. So here it is in the comments section, in the chat comments. I'm pointing it out. So this is my comment. You can go here and contribute. What we're going to do with this money is we're going to have an intern who's going to cut these videos, make shorts out of these videos, and then put them out. And an intern who's also going to label everything, right? So all the episodes, a lot of people have given feedback that we need information about what the videos are discussing, right? Before watching or while watching, we need a label. So Mr. Raju Kumar tried really hard to label all the episodes, and he did very well. But obviously he can't do it regularly. He did that for like 120 episodes. But the thing is, it has to be very regular, and it has to happen as the episode comes out, so that when a person is talking, when a person is joining in later, right, the repeat view, he can know what it's all about. Right now, that can't happen as regularly, so we'll need a dedicated resource on that. These are the two places, and also the StreamYard subscription, which I'll buy from my own money, 2,500. So 2,500 is put in this already. The rest you can contribute. If we are able to get something like a 7.5, 10,000 rupees, we'll be able to manage growing this thing, and we can have that panel thing also, right? The TV panel thing. Very interesting. I hope this makes sense, folks. If we are not able to raise 7.5 or 10,000 rupees for an intern, I will return all the money because I don't want to keep the money, right? It's awkward, right? So if we get that money, it's fine. If we don't, I'll have to refund it to you. So uh, make sure that something happens in that area, right? Moving on. Good night. Oh, sorry. Have a good day, folks. Have a beautiful day. Bye bye.